Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to share with you my reasons why the current Bitcoin cycle here is very different to the previous two cycles and how we can respond to them accordingly. As you know, here at Wisdom Bites, we're trying to add value in our understanding of exactly where we are and where we are likely to be heading in the next few days, weeks and months with the Bitcoin charts and the crypto space. Please make sure you stick around to the end where I'll share with you my thoughts of what I'm doing in response to this particular cycle here. So if that sounds interesting, then get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. So we're going to start off with this chart here on the monthly time frame, and I've divided the cycles from the end of the first bear market here, then the second at the end of this bear market in December 2018, and this is our obviously current cycle here. If we focus firstly on the end of the first cycle, this bear market here, we topped out here in November 2013, and this was followed by a 1-year bear market. Up to this point here, you can see that there was a certain support line all the way along here. And before the beginning of the next cycle, we had this capitulation here, which marked the end of that cycle and marked the end of that bear market. So in this cycle, we had, as you can see, a blow off top here, a bear market fall with a support line down here and a final capitulation candle here, which marked the end of that bear market. Similarly, in the second cycle, if we have a closer look at this cycle here at the end of 2018, very similar to the first cycle, we had the blow off top over here with a massive rise along the way. Then we had the 1-year bear market with a support line very similar to the first cycle, and followed by a capitulation candle here, which marked the end of that bear market. So the first and second cycles were extremely similar to each other. So when we finished this cycle with this capitulation candle, that marked the beginning of the next bull market. And the main thing to remember here is that we had a very big run up here, had a blow off top, 12 months bear market, ending with a capitulation candle. So how does that compare with the current cycle here? Because in many ways it's very similar. However, I'm going to identify a few things which are very different and why the outcomes may be different here as well. So that was the capitulation candle at the end of the second cycle. Then we had this run up, came back for the COVID situation down here, and then went on this big run up here up to $64,000. And if anybody remembers this run up that we had up to April 2021, it didn't feel like a blow off top here. And certainly the market came back down and tried again to have that blow off top, but once again it didn't materialize because it should have gone on much further, and that was the expectation for most of the people in this space. And there lies the first difference between this current cycle to the previous two cycles. Where we had a blow off top at the end of a big run, we didn't have a blow off top in this current cycle. Instead, what we've had is a double top, with the first top being at $64,000 and the market coming back and doing the double top at $69,000. So when you see that difference, that gives us a clue that maybe, and it is a maybe, obviously anything can happen and it may well follow the first two cycles, but we are looking at the differences as to why this cycle may not end up like this cycle here in the first and the second cycles. But we are looking at what could happen here and maybe not repeat what happened in the first and the second cycles over here. The second difference is that, as we saw from the first two cycles, there was only one top in the second cycle and one top in the first cycle. So once again, we know that this cycle is now playing out in a very different way to the first and second cycles. The third main difference why this cycle is different is that we didn't have the expected or near expected rise that we would have got here based on the first two cycles. So when this second cycle ended here on this candle, I'll just take this dividing line away and move this to the side. So you can see the bottom was on this candle here in December 2018, and that was at 3,100. So if we take the run up from the bottom of that candle to the top at 69,000, that represented a 20x from the bottom to the top, which in crypto terms isn't really a big blow off top, and what was expected round here would have been around about the $200,000 mark, which is the figures that most people were banding about on the YouTube, including myself. When you compare that with the second cycle, the rise was from this bottom of the first cycle here up to the 2018 high of 19,800. You can see that was 120x from that, which bears no resemblance to the 20x that we got in the third cycle. And that's why the expectations in the third cycle, i.e. the current cycle, was much greater than the 20x that we got. And if we have a look at the first cycle rise, if we take the figure from this bottom here to the top of that cycle at around about 1140, that was 112,000% increase from the bottom to the top here. Because we know that the cycles follow similar patterns but not exactly, therefore we do have to allow for this wriggle room for current cycle to be slightly different. So just like the first and the second cycle, that after the top off we went sideways before the final capitulation, very similarly here in the current cycle we've gone sideways currently at these levels here. However, if you notice, we did also go sideways here. And we got our capitulation, or the first part of it, if this is to be believed that we're going to have a second capitulation here. So in a way, this cycle's already had its capitulation, very similar to the first and the second cycles. So what people are expecting is that from the current levels of 19,000, they're expecting one final capitulation here. And they're equating this with the second cycle capitulation and the first cycle capitulation. And only time will tell if this works out. It may well be that we've already had our capitulation with this candle. And I remember this cycle very, very well, that when we were coming to these markers here and the price was making lower highs on a support line here at around 6,000, the sentiment around here seems to be the same as over here. That when we'd had this capitulation and we were going sideways with these candles, this is similar to what's happened here. After we had this capitulation candle earlier on this year, the following few months are following the same fear and greed sentiment that we had over here. And so at this point, people were expecting the market to go much lower, to around about the $1,000 mark. And here, people are expecting it to go down to $10,000, $11,000 and $12,000 mark. And of course it can happen. No one knows the future. Please don't take this as financial advice. I'm just giving you my perspective of what I see in the charts here. And I showed you in the last video that the majority of people are expecting some sort of a capitulation here. And as I've shown you in the last few videos, there is a conditioning that goes on with the market, that it conditions you into believing certain things during the emotional turmoil of the fear and greed along the bear market here and the bull market here. So here at the bull market, it's conditioning you to believe that the market is going to go higher and higher. And everybody chases these markets to this point here, where at the final stage, at this point, they're basically maxing their credit cards out, borrowing money, selling items to try and put money on here because they can see they can make a lot of money along the way. But once everybody's money is in, the market does this. And similarly, it's conditioning us to believe that the market is going to go lower and lower. And of course it can do, and it may well do that here. However, we have to be aware of that process and leave the flexibility of the thought open that maybe this is not going to happen. Something interesting developing on the weekly chart, which we saw similar to the end of the second cycle here, that once we'd capitulated down to 3,100, there was a series of small candles where the market was just creeping up slowly but surely while keeping everyone's emotions intact that we are about to fall to the downside. But instead, where the market shocked everybody by this one massive candle here on the 1st of April 2019. So what the market was doing was engaging in a tactic called the salami tactics, where it slowly creeps up, not giving any clue that we're about to do this. And look at what's happening here. Maybe this is a sign. You can see these smaller candles just creeping up here. And maybe it's following this similar pattern. And one of these days, maybe in October, November or December, even January, when we go up this level here, then we're going to get one massive big jump over here when everybody is expecting the downturn. So what is the probability of this happening? So my thoughts on this is, firstly, as you know, I'm 75% invested. for the reasons I've given in many of my previous videos. And if you want to know those, then please watch the last video especially, where I gave you the reasons why I'm thinking that we've bottomed out at 17.5. So the first thing for me anyway, and please remember, this is just my perspective, this is what I'm doing. You've got to do your own diligence and come to your own conclusions, because I may be doing something completely wrong here and I might not be able to see the wood for the trees. So my own thoughts are to have enough exposure here to allow me to be invested, so that if there is a surprise move here in October, November or December, etc., then I'm aboard the train to ride me to the upside. Secondly, I have about 25% cash available, enough to be able to pick up Bitcoin at a cheaper price if this capitulation candle then plays out instead of this. And my thinking is, and the problem I see is, that a lot of people got left behind when we had this run up here, when everybody was expecting a downturn, and we got this candle here instead. And it left everyone behind. And even after this candle, I remember people saying, oh, this is just a fake out. This is just a fake rally. And then the market, have a look at this, what happened afterwards. Again, it made one of these salami tactic candles for many, many weeks before it rushed up very quickly to these levels. So people got left behind waiting from here, waiting for the price to go lower. But by the time they got on board, they were at the top here, and they rode it all the way down here for the second time after this bear market. And this is the danger of keeping cash at these levels here. So for me, 25% is the amount of cash I feel comfortable with, and everybody has their own comfortable percentage. So the danger for me, if I was in total cash over here, then these levels that people got on board are equivalent to these levels here at around about $40,000 to $45,000. And that's one of the reasons why I made the last video, which was to help people not to miss out on the next big move, and to use the 8 EMA as a guide, as a reference point, that beyond which the market is telling us to actually climb on board. And that would be a good sign, because as you've seen previously, once we get to the 8 EMA, that's when things start to happen. However, all this analysis I've done could be totally negated and may not age well, because in a couple of hours' time we've got the elephant in the room for today, and that is the CPI figures from the Fed. So in a few hours' time we're expecting the inflation figures from the USA, and if the inflation figures are really bad, then this could actually trigger this capitulation here. Only time will tell, but if the inflation figures are good, we could be seeing this, or the beginnings of the rise up. So let's wait and see what happens. Those inflation figures will be coming out around about 1 hour before the market opens, which is I think 8:30 Eastern time. So look out for those and see where we are. Okay, so we'll leave it there. I hope you found value in this video, and if you did, then please do remember to like, to subscribe, and to turn on the notification bell. If you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.